Joining me now is Jeffery Roach. He is the chief economist at LPL Financial. Jeffery, welcome.
Good morning. Thanks for having me.
So what storylines are you tracking most closely during this holiday shortened trading week?
Well, of course, we're still digesting a little bit of what the trends are for inflation. We got some important inflation measures last week. Still have a little bit of uncertainty around the job market because of those months lost in the last quarter. Still working through some dirty data, we might say. But in this short week, looking for growth stats, there's quite a wide range of estimates for how fast the economy grew in Q4. And so we're going to be anticipating that. That's going to come later in the week. Very important in terms of policy, the dynamics between how the economy is growing, particularly because of upper and middle income households and solid balance sheets on the corporate side of things, but also a very tight labor market because unemployment is very low. So a lot to digest in a short trading week.
And if we could break that down a little more, what do you think we're going to see with the GDP data and the PCE data later this week?
Well, we think we're going to see some pretty decent numbers out of Q4, so we expect something around 2.5%. Now, it's a little bit confusing because just a few weeks ago, the Atlanta Fed had a very, very high number for the Q4 estimate, pushing 5.5%, which is just unreasonably high. But it will be above trend. So part of the choppiness is inventory readjustments. We're still going through a couple of months where businesses were adjusting the import-export dynamics. And so expect some volatility in addition to inventories I just mentioned, but also in the trade numbers. Underlying it all, though, fairly decent spending on both goods and services from the consumer side. So expect a above trend 2.5+% growth on the fourth quarter. In terms of inflation, we do think it's holding a little bit on the high side, flatlining at around 2.8% year on year for core PCE. We really need to see the month-on-month numbers posting closer to 0.1 and 0.2. That's the month-on-month. That will eventually draw down those annual numbers. We do think, though, by the end of 2026, inflation in December, expect to see something around 2.2 to 2.3% core PCE.
All right. And what impact, if any, do you think that this data on Friday will have on the next Fed decision about a month away?
Well, I don't think it's going to change expectations too much on Fed policy. So we do expect the Fed to hold in this upcoming meeting, most likely holding in April as well. Now, it's important to anticipate the March meeting will have an updated summary of economic projections. That's going to be important for investors to try to digest. And I think it's going to be another time where the Fed will produce an expectation where they revise up growth for 2026 and they revise down inflation for 2026. So on net, this might be a pretty decent summary for markets to anticipate. The Fed will indeed cut, but we won't see the first cut happen until the latter half of 2026.
All right, and you're joining us for the first time since President Trump nominated Kevin Warsh for Fed chair. If Warsh is eventually confirmed to the position, what do you think we can expect?
Well, I think we will see a little bit more of a hawkish Fed. I do think, though, that he's going to continue to pound the table on Fed independence. He's been pretty strong in that regard, so he's not a yes man. That was, I think, one of the reasons why investors cheered that nomination. One thing that's going to create a little bit of stir, though, is in a recent speech last year, he talked about, he actually called forward guidance and projections and forecasts central bank junk food candy. And so that's going to be a little bit unusual, a little bit challenging. Is he going to pull back what we began seeing out of the Bernanke-led Fed? I don't know if he's going to be able to find consensus on that. There is value, I think, in forward guidance and in those projections that allows the markets to have something to base their expectations on. So maybe a little bit of choppiness as it begins to learn how to be a consensus builder.
And Jeffrey, what challenges or opportunities is the Fed facing as it looks to satisfy both ends of the dual mandate?
Well, certainly challenging when you see a labor force in flux. So we do have the aging of the population is no surprise here. But I think what's going to be interesting in these pivotal years of 2026, 2027, where more and more people leave the labor force. One of the things I'm particularly tracking, I'm sure policymakers are looking at this as well, is trying to identify what the trends are in what we call the prime age working force. That's 25 to 54-year-olds. And we actually see the employment to population ratios for that prime age cohort at about 80.9%. That's actually a little bit higher than where it was pre-pandemic. So we need to keep a full, healthy, productive prime age workforce, and that's going to allow the economy to grow, perhaps as well as it's been growing the last several quarters, despite a shrinking labor force.
All right, thank you. Jeffery Roach, Chief Economist at LPL Financial.
Thanks.